Good afternoon, everyone. Welcome back to the show. My name is Michael Rebello. I am your host and founder of the Ever Forward Mindset podcast. I'm a 20-year-old entrepreneur who chose entrepreneurship over the traditional college path and inspired and driven by my goal to retire my mother and to help other middle Americans just like her learn about multifamily real estate and invest in it to build long-lasting financial freedom. I am unbelievably excited to have these two on today. This is a combo because usually I have one guest, but I'm like, I have to have you both on here. This is way too much good content to just have it on one each segment. We have to have you both on. Today we're featuring Jay and Tanna Boersma, who are actually just north of me in Fountain Hills, Phoenix. Absolutely excellent couple, great duo in the multifamily space, but I won't steal their thunder. I would love for you both to introduce yourself. What do you do? How did you get into the business? And just feel free to talk about yourselves. Welcome to the show.
Thank you so much. Hey, we're excited to be with you also, Michael. But let's let Tana go first. She never goes first. I always do all the talking, so we'll let her talk first.
Oh, wow. This is, yeah, something new. So, Jay and I have been residential mortgage lenders for over 25 years. So, we've been in real estate for a really long time. And we knew that we wanted to transition into something that would give us and others passive income. Um, so, Jay found multifamily investing and multifamily being an operator in that space. And I'll let him tell a little bit more about that. But so we have over 300 units. We're closing on 64 next week. And we are the lead asset manager on all of those. So we really love to kind of bring the project together and then organize all the information and the investors and our partners and just keep the information flowing and stay on top of all the things that are going on with the property manager and with our partners. And a little bit about us personally, we have three kids, 25, 22, and 19. And we live in the Phoenix area, like Michael said. We enjoy hiking and traveling and being outdoors. And that's a little bit about us from my perspective. I'm sure Jay's got a little bit more to say. So,
But not a lot. Great job, hun. So yeah, we're real estate people. And actually next month, January of 2026, will be the first month of my 31st year as a residential mortgage lender. And Tana actually has worked with me, and it'll be the first month of her like 28th year. So we're definitely real estate people interested in really all real estate asset classes as real estate junkies, but we're very focused on multifamily for investing and for helping investors earn great returns. Um, yeah, I think that's about it as far as who we are for now.
That is awesome. Thank you both for sharing. And just a small plug, I'm actually having the wonderful pleasure of working with these two fabulous people on that 64 unit as well. Um, as we just dive in now, just talking about multifamily, I would love for you two to kind of touch upon how did you two get into multifamily? I know that you have been in the real estate space for a long time and have the patience of a saint with mortgage lending for 31 years, Jay. I mean, it's just incredible. Both of you are in the business. But what was the catalyst? What made you both decide, let's go into multifamily, let's scale? Because going to multifamily, that's a huge upgrade. There must have been an epiphany behind that. So kind of dive into that a little bit. Either of you could take the floor, doesn't matter, or you two can just collectively go at it.
Well, I'll start with that. So just prior to COVID, 2018, 2019, I'd been in the mortgage business for 25 years at that time and was kind of starting to think about the last third of my career. And as that career began to wind down, I was looking out like 10 years in the future and knew that I needed to create some passive income and, not rely on, the stock market, not rely on Social Security, but have other passive income that I could rely on in retirement. And being real estate people and just doing my homework, I always like the idea of having other people pay for my assets. And multifamily housing is a great way to have tenants be paying, ultimately paying for the mortgage. So that was the beginning. So the thought was passive investment. Well, but then as we got into the business and studied it more and didn't have a whole ton of investable liquid capital, but loved the business of multifamily, we just decided to transition from residential mortgage lending to multifamily. And originally the original vision was for that to be done incrementally over about a 10-year period. That would be from, let's say, 2020 to 2030. But we've ultimately made the complete transition about 2 years ago. So we bought our first multifamily asset in 2020, but by somewhere around 2.5 years ago, we were already spending 80 to 90% of our time in that business of multifamily.
That is awesome. That's excellent too, where you acknowledge the fact that, Social Security and Wall Street wasn't exactly going to cut it. Very similar to what Mom and I have seen, where, it does work, but it's not as efficient as it used to be, or it can be scaled. You both pretty much knew that real estate, you were the most familiar with it. And you figure, why can't we scale? Why can't we just get something where instead of working for the dollar can start working for us? And I think that's crucial. And when it comes to these large projects, I mean, they're exactly not the easiest to keep track. There's a lot of organization that goes into that. There's a lot of communication. So I'm directing this over to Tana because Tana, I have never seen a level of organization from a human being on a GP that I've ever witnessed. I mean, your level of organization is just unnatural. It's so refreshing because all I have to do is just type your name in the email. I'm like, oh, there it is. Instead of me scrolling through all these documents, the mess abyss of my computer. So, Tana, how important when it comes to being the lead asset managers and general partners on these deals? There's a lot that goes into it, whether it comes to documents, spreadsheets, underwriting, asset management as a total, and basically who's on the team and who's doing what and, who's carrying out what roles. How important is organization and communication when it comes to taking on those big responsibilities?
Yeah, so thank you so much. I do love to, it's kind of like my superpower, I guess, if you will, is being behind the scenes, being at my dad's, keeping us all on the same page, understanding what our, um, any issues that we've got outstanding, understanding the milestones that we've completed. So I really do love that part of what I do. And I feel like it's probably one of the most important things besides finding the deal and making sure that it's a good investment for our partners and our investors is to make sure that we leave no stone unturned. We keep, we keep all of the notes. Anybody can go back and see if we've talked about something, what the result was, if we've got um, something outstanding that we still need to, check off the list before we get to closing. Um, so I think it's just really important for people to have access to information at their fingertips, especially if you're someone that's talking to investors so that you are confident that you've got that information somewhere handy. And if you don't, you can just reach out and we'll point you in the right direction. So yeah, it's a really big deal and it helps us to, we kind of grow with every deal. Like we're organized and we're operating this way. And, if we have a new partner and they have a suggestion, we love to listen to everyone's ideas and integrate those in and become better with every deal that we do and as we progress. So, yeah, did that answer your question?
That answered it perfectly. I love that, and
Okay.
it's so important
Hey,
to have organization too.
Michael, interjectorily, at home we call it organizing and reorganizing and we make no real distinction between the two and not necessarily with our spreadsheets. And you've seen the spreadsheets where there's 10 or 12 different tabs with different information and all that stuff. But even in the pantry, you know, if you knew how many times that pantry got organized and reorganized, you'd be amazed.
Okay, Jay doesn't do much of the organizing, so it's really shocking to him if I'm in the pantry once a year, kind of rearranging things and clearing out the old stuff. So you can imagine the fun that we have with organizing and reorganizing around here.
Absolutely. And you know what? I'm in that same boat too, where my mother, she's the organizer, and then when she goes in the pantry for an hour, I go, everything I know where it was then is now completely moved. I look at it, I'm like, wow, we have so much space. And she's like, yeah, because it's all disorganized. I'm like, okay, fair
Yeah,
enough.
that's right.
And I mean, organization is crucial. I mean, if you have a messy office or a messy room, that shows you have a cluttered mind. But if you're able to organize everything, it's very clear to think. It's very clear to go to one specific tab. Sure, there might be a lot of tabs of information, but you know exactly where to go. It's
Yeah,
nice to know where things are. That's usually what my mom says. I'm terrible with that. Like, if there's an empty spot on the counter, I'm going to fill it and put it. I'm like, yeah, I'll get to it later. That never happens. But
yeah. You know
absolutely, I
what? I
understand that.
think that's such a great thing about um, partnering. So, we have multiple partners in all of our deals, and it's so wonderful. Everybody looks at things differently, thinks about things differently, operates differently. So we're able to learn from each other and to grow. And that's really one of my favorite things. We had a really great partner meeting, I think it was yesterday, and so much collaboration and sharing and encouraging. So that's one of the fun things about this industry, I think, is that we can't do it alone. We have to do it with other people. So it can be a really great experience.
Absolutely. And there's strength in numbers, especially. I mean, this
Yeah,
isn't a loan shark business. You know, this is a community where you have, I'll give you an example. When I was getting into multifamily, I thought, people from BlackRock would, own these, like, one individual person like this multi-billionaire. No, it's groups of people like us that can own it, and we can teach people how to do it as well. And that's exactly what
yeah,
you two are doing. So I love that. But in order to purchase and get into these multifamily properties, there's a lot of numbers that go into it. And I'm not exactly the numbers guy, but I know you two are. So when it comes to investing, either whether it's active or passively, there's always the phrase, figures don't lie, liars sit and figure. And that's what we call underwriting. So if maybe one of you two can take the mic and kind of explain how important underwriting is when you're looking at the financials, when you're looking at the 5 year projections, where do you see this deal going for the investors, and how important it is to have those numbers ready to go in all these worst case scenarios. So kind of delve into the importance of underwriting and why it's so crucial for this business.
Well, so we underwrite together, and there's an immense amount of data that needs to go into an analysis of, first of all, a market, and then secondly, a property. And so the way that we analyze all of our assets that we look at is Tana gets all the information organized, puts it all in the analyzer with all the backup notes and all the links and everything that you've seen um, on the opportunity that we're working on together. And then I go in and really look at the rent and the revenue and the expenses and the interest rate on the loan, the terms of the loan, those kind of things, the projected growth rates. I tell you what has been really different on this latest transaction that we're working on is ChatGPT and AI. And it gives us a level of information and access to data that I was not accustomed to being able to use in the analysis. So it makes it faster, but yet the information is just there's just a depth of information that really allows us to have a much better handle on the market than the way that we were analyzing properties previously. Another great advantage to have when you're analyzing properties is if you're in the market and you've got assets in the market already, then kind of regardless of what the metric or what the expenses are, for example, that the market might tell you should be able to achieve if you've got four, five, six, 10 properties or another 500 or 1,000 doors all around the same market, and you can look at those profit and loss statements and see exactly what you're doing for expenses on all those properties, then you know that you're going to achieve something similar to that based on personal experience and based on working, all day, every day, managing those expenses. It really gives you a better handle on what you'll be able to achieve on the next asset that you buy in that market. So that I kind of drifted away from I think we were talking about underwriting and Tana, do you have anything else to add about that?
Well, I think just one thing to add is that it's underwriting just keeps going when we're working on. I mean, we underwrite it day after day after day. Every time we get new information, every time we, you know, we do the due diligence, we learn about things. So we're constantly stress testing the deal, if you will, to make sure that it's still that the metrics still hold from where we started. So it's just a kind of a continuous work of, it's kind of a work in progress, uh, but it definitely is something that takes more than one person. You want more eyes on it than just one person to make sure that we're all seeing it the same way. And yeah.
I love that. Thank you both for sharing because I'm not an underwriter by any stretch of the imagination, but I know it's very important to look at those P&Ls, right? And those projections. What does the loan look like? I mean, we're all listening to Jerome Powell, like, what is he going to say now? And then you got to factor it into the underwriting. I mean, the underwriting is a living thing where it changes constantly. I mean, like nobody predicted COVID, for example, and when that hit, you had prices that went up, prices that went down, the whole market flipped upside down. You had different trends go topsy turvy, but that's where the underwriting comes into play, where you start changing and pulling these levers to go, okay, this is what our property is going to project at. And now with multifamily, we both know that's not always good. There's always the good, the bad, and the ugly. So I would love for you both to kind of delve into what was your most challenging project or most challenging thing in this business, and how are you able to come out of it much better prepared after learning that. I forget who says this. I think it's actually Rod Cleve that says it's not mistakes, it's seminars. So what was that one seminar that you both had that you're able to walk away from better prepared and also kind of fortified for not just underwriting, but for future deals to come?
So I think one of the seminars, if you will, that we've had is with a property that we purchased that was built in the early 70s. And it just has had more plumbing issues, if you will, than we were expecting. So, I think with every property, you learn and you become better and you know what to look for, you know what to plan for. It was our first property and it has good returns and, it's going along just fine. But there were some surprises once, we got into there and it was cast iron plumbing and it starts crumbling sometimes. And so, I think that was a big start to our, learning about um, some of the things to look at a little bit differently. And it comes from experience. Like a lot of things you can't know everything. It takes time and it takes experience to uncover the things that you need to be looking for. Of course, there are the main things that we're mostly aware of, but sometimes you get in there and it doesn't go the way that you expected that it would. But if you have good relationships with your property manager and the employees that work at the property, then a lot of times you can, find creative ways to save on the repairs that you're doing and things like that. So I think that's just, one example of it. We've learned so much through all of the acquisitions and through the work that we're doing. And uh, we try to not say, oh, it was a big mistake. We just say, okay, this is what's happening. How do we address it? How do we make sure that our investors are protected and keep on moving along? And there's always going to be bumps in the road. We just have to face them head on and be honest about it. I think that's one of the things that's really important to us is we're not hiding that from an investor. When we send an update out, we'll say, we have these issues with plumbing and we're addressing them, and this is how we see it going in the future. So it's just keeping clear communication regarding what's happening at the properties is really important for our relationships with our partners and our investors.
Love that.
So the good news in that seminar though is it didn't end up being a costly seminar. It's costing us more on capital replacement of plumbing than we thought it would. But the good news is that we were conservative with our reserves to start out with. So now we're 4 years in and we've still got reserves on that particular asset. And but also we were super conservative with projected rents, and rents were higher right out of the gate and consistently higher throughout the our ownership of this property for the last 4 years. So those have more than offset what we learned about old plumbing. But now we look, we probably don't buy many more stainless or cast iron um, properties with stainless or cast iron. We like PVC.
There you go. And there is so much that you two touched upon that's just so value packed. Like, for example, Tanna, I want to kind of reiterate this, where you were sharing with your investors and your team, hey, these are the issues and this is what we're doing to overcome it and to fix it. That's very important because there's a handful of operators that don't talk about that, where they think, oh, it's like painted in gold. I mean, multifamily, but no, it's actually a very difficult industry. And if you can be transparent and honest with your investors, you're going to gain credibility and trust. And I think that's very important as well. Being conservative is also very good, where you two both know that this property can make quite a bit of cash flow and have a big chunk of equity at the end, but you also have to be realistic. What happens if prices go up? Like, for example, tariffs or cost of building materials or things being shipped across seas or even across the country. There's a lot of expenses that goes into that that could jack up prices. Like, for example, a washing machine for a per unit might go up by, I don't know, $200 over the course of 100 units. That's a lot of money, and you have to figure that out and have those reserves, like you said, Jay, those capital reserves to back that up. And if you can explain to investors that this is what we're doing to mitigate risk and to make sure that we're in the black instead of in the red, this is what we're doing to make sure that your money is protected. That's so important. And since you both are underwriters, I mean, both of you could take this question, but when it comes to conservative underwriting, I'm kind of circling back to underwriting again. Being conservative, what does it mean to be conservative in underwriting, and how does that help gauge the business plan when you're ready to purchase a multifamily property?
Well, I think being conservative means that you're not always assuming the best case scenario. In fact, you never assume the best case scenario, but you've got a lot of different variables. Some of them you can really nail down, and some of them there's going to be a range. Like you don't necessarily, you know what might be predicted for the market as far as rent growth, and so you make an assumption, but you never make the assumption if Chat GPT tells you it's going to be 4% for the next 5 years in Tulsa, well, you might use 2.5% or 3%. So being conservative is just really in all these different variables, um, never pushing the envelope to think any of these different variables you're going to hit your best case scenario. You want to keep it in mind because you want to see and you want to have an idea of what you can achieve as far as performance, but you're never going to do an analysis where you're banking on hitting the best case scenario on most or all of your variables.
Right. And it's very important. Um, for example, you do not want to do a capital call. And then for those that don't know what a capital call is that are listening in, a capital call is basically saying, hey, we need more money because we're out of it. That's the short and sweet version of it. I know it's not sweet, but I don't know what else to use. But you don't want to do that. But if you're being conservative and mitigating risk, you could prevent that. And Tana, like you said, being honest with your investors, saying, "Hey, this is what's happening. We had a drop in vacancy, or we had a drop in occupancy. Here's why." And if you walk them through it, they too can learn because every operator, I think, should still be a student and not just a teacher as well. Because, like for example, Jay, in the beginning of this episode, you were talking about using AI, utilizing AI, and that's crucial because I didn't know how to use AI 2 years ago, and then all of a sudden it just boom, it's been able to help me do deal analysis, market research. So we're always learning. We're always students of the new trends. But just to wrap up our episode, what is one thing that you two would share with the audience about multifamily and what they should do? Like, for example, you both realized that Social Security, the 401k, and the IRA wasn't cutting it, and you had that epiphany to go, why don't we just go into multifamily? So to start in multifamily, what is one way that you would recommend the audience to start to at least look into multifamily and to just start generating that passive income that they might not know exists?
I think the one thing that people need to do if they're interested in investing in multifamily is to become educated about what it means, what the returns mean. Someone might be telling you what the IRR is or the cash on cash. You need to really know what those things mean. So it's really important to just find a source of reliable information so that you can understand um, what the metrics are and really how it works. So if you're investing in a syndication, you need to understand what that means. How does it work? How am I compensated? All the, legal documents that you're going to have to sign. So if you have someone that you're investing with, they should be able to share with you an example of what they've done in the past and explain it to you and just take some time. So I think education is key. You don't want to jump into anything until you really understand it. So you have to find someone that you can trust and that's reliable that will help you to become educated in your own time. Like it doesn't, you don't have to rush into it. You can, be sure that you're just taking your time to understand what you're doing and then, you know, hop in and try it.
Awesome. Love that. Thank you so much for sharing. Thank you so much both for your time. But of course, if there's people that want to learn and grow with you and want to connect with you, what is the best way that people can connect with the both of you?
Yeah, so I think the best way to you can really talking to Jay is probably the starting point. You can reach him. The cell phone number is 480-206-8659. So you can call or text him, or you can just go to our website and you can read more about us. And our contact information is there also. It's www.neighborhoodcapitalresources.com.
Awesome. Well, ladies and gentlemen, you heard it from the best of the best. This wraps up today's episode. And to my audience out there, build yourself better and bigger every day. Live better, live bigger. Always move ever forward. Jay, Tana, thank you so much for your time today. Thank you so much for being on and sharing your wisdom. I'm sure a lot of people got value out of this. So thank you again for coming on.
Our
Thank you,
pleasure. It was
Michael.
great.
Yeah,
Thanks,
lots of
Michael.
fun.